Right. That's a good one. All right. So yesterday we started our mentorship class by looking at a few features and a few icons that I felt was very necessary for us to know as we traverse this royalq opportunity. So a few of them that we talked about was the API binding, and I think we stated what it is used for. We also talked about the revenue details. We talked about the reward details. We talked about my mentor icon. We talked about the invitation icon. We talked about the more and some of the hidden features that are, under the more categories. And we said, of course, whatever you see on the homepage is what you would have actually customized based on your preference of use, your user preference, how often you may want to use them. So you have to make shorten, the path by just putting them visible on your homepage. So I also showed you how you can go about customizing your homepage so that you keep the icons you most use on your homepage and the ones you may not so much use frequently at the back page or under the more category. We talked about these moving messages or pictures. We talked about these moving notifications and these other ones. And I also gave a hint on why it is very important for you to also actually so why it will be very important for you, to also read them and keep updated with whatever is transpiring within the platform. Because there's some other things that may be done when you don't pay attention to them, when they have sent a notification, it will get you by surprise. And then you'll begin complaining here and there that royalq has done this, royalq has done that, yet it would be your negligence not to pay attention and take some of this information very seriously. So that is what we looked at yesterday. And yesterday we were dived in briefly on the two markets, okay, which at the moment anyone using the royalq can actually, venture into and try to enjoy some money of profits from them. We said we have two types of markets which you can actually traverse using the royalq bot. One of them is the sports market and then the futures market. And we briefly talked about the futures market. Well, what literally trading futures look like. We painted a little picture with regards to how trading a future, futures is like, okay? And I believe we have a little hint. Maybe at a later time, we may go a little deeper into understanding the futures market. But for this moment, or for consumption of our Zoom call, we're going to concentrate or narrow our attention to the sports market. Now, the sports market, as the name sounds, spot market, it is a market where a transaction happens on the spot. Deals are closed there and then, provided an agreement has been met, deal is closed. Okay, so that's what the sports market is all about. So the sports market is where selling and buying happens instantaneously, continuously, like instantly. You close a deal, you strike a deal and close a deal there and then, whenever you come to terms. Like, for example, what I mean about coming to terms is with regards to you enter, you buy at a specific price of interest, and then you exit the market by selling your asset at a specific percentage or at a specific price. And then that's the deal closed. Okay? So that's what the sports market is all about. And another thing you need to understand about the sports market, as I said yesterday, or I hinted on yesterday, is that the sports market, first of all, when you're in a sports market, first of all, there is zero loss. There is no loss in the sports market. However, right? So that is what happens in the sports market. There is zero loss. One, the transaction happens on spots, right? And then two, there is zero loss. There's no loss in the sports market. The only thing you experience in the sports market is what we call, there are two terms that we must get used to before we can dive any further. There's what we call floating loss, then there's what we call floating profit. Those are the two terminologies you need to be acquainted with when you're dealing in the sports market. And I'm going to explain a little bit onto what they are. Now, normally, whenever you're using the royalq robot for trading, when the royalq robot executes a buy order, whenever it buys at a specific price, whether be it a current price or at a specific preset price, royalq establishes what we call an average price, right? An average price. Now, the average price here becomes like the benchmark to determine whether you are floating in profit or floating in a loss. All right. Now, there's some noise here, which is affecting me. I hope it's okay. When you join in, make sure you mute yourself if you don't have anything to say for now, which I trust you still don't have. If you know you have a noisy background, please mute. Otherwise, I will remove you, and then you don't attend. And you know, when I remove you on Zoom, you cannot join. So please do yourself a favor and then mute yourself, and only speak when it is necessary. And that time for speaking is there. Allow me help those who may be very keen to listen to what I have to present. Okay, thank you. Okay, so coming back here, I was talking about the spot. This three terminologies that whenever the robot executes a buy order, whether be it at a current market price or at a preset price, okay, the robot establishes what we call an average price. Now, the average price becomes like the benchmark to determine whether you are floating in a loss or floating in a profit. In other words, it becomes a reference point. It becomes a reference point, right? A benchmark when I talk about a benchmark. Now, how would it appear when it comes to like a benchmark? I am trying to simplify it so that you understand these two scenarios of floating loss and floating profit. Let's assume the robot bought at a specific price, and this is our average price. Yes, that is the average price. The average price is going to be established here. Now, if the current price of the coin goes above this average price, let's say it surpasses the average price, you will see your coin floating in profit. You'll be seeing yourself floating already in profit. That is if the current price goes above the average price. If the current price of the coin falls below the average price, you will be seeing what you call a floating loss. You will be floating in a loss. All right? You will be floating in a loss. When the price of the coin goes above the average price, you are in profit. When it is below, you are in a loss. Now, what we call a floating loss is not a real loss. It is called unrealized loss. All right? It is unrealized loss. Why do we call it unrealized loss? Whatever asset you buy on the sports market, you own it. All right? It literally becomes yours. You don't lose it. You become the custodian within your exchange or within your sports account or sports wallet. It remains there for as long as you wish, not until you make up a decision to sell it out. You get that? So you own it. Now, take this, for example, that you bought, let's say, a bag of rice. I like using this example. One bag of rice, you bought it at $100. It was costing $100 for one bag of rice. And then your interest or your intention of buying was to sell when the price rises to $120. Unfortunately, the price did not immediately rise to $120. Instead, the price dropped to $50, right? Now, these are two scenarios. You have two scenarios. You have two scenarios, okay? Sorry for that. So you have two scenarios. The first scenario is the price dropping to 50. Another one, the price rising to 120. But this was your buying price. You bought that bag of rice when it was costing $100. But this time, it dropped to $50. The same bag of rice, right? Now, tomorrow you wake up, one bag of rice which you bought at 100 is now going for what? For $50. Now, if you had already bought this bag of rice at $100 and then tomorrow you wake up that the price has dropped to $50, if you still own your bag of rice, have you made a loss? Maybe you unmute and answer me there. Have you made any loss? For as long as you still have your bag of rice in your house, you have not sold it. Have you made a loss?
No, not yet. You still own the commodity.
You haven't made, yes, that's correct. You haven't made any loss yet, but you are floating in a loss.
Yeah.
The loss is not yet realized because you've not decided to sell the bag of rice at $50. You are still floating in it. You are just floating in it. So you can't say it is real. It is a loss. It is still unrealized loss. You are floating in a loss. Why? Because the price dropped below the price you bought by $50. You get that? So when you decide to sell, I say, maybe I cannot wait anymore for this price to come back to 100. Okay, so that I neither make loss or profit. I just want my capital back. You can decide to say, I'm going to wait until it comes back to 100, then I will sell. Some other person will say, no, for me, I'm going to be patient. I'm going to wait until it surpasses the $100 at which I bought it. That is also another person. Some other person will say, for me, I'm going to decide to sell it at $50. Now, these are two serious scenarios. The person who decides to sell at $50 is that person who would have said, okay, I accept the loss. I accept I'm going to cut the loss. I accept the $50 to go. So you're going to sell one bag of rice at $50. You would have made a loss of how much? Of $50. You get that? Because you sold at a lower price than you bought. You get that? For this person who decided to wait for the price to bounce back to $100, which is the initial price he bought the bag of rice, this person, and then he decides to sell, this person will not make any loss. Neither will he make any profit. The person will just recover back the capital. But another thing, a person who decided to wait patiently and say, you know what, whatever goes down will always come up. However much it takes, however long it takes, it will always rise or it will always come back. Now, this person is going to say, okay, let me wait. My intention was 120. I am going to be patient and wait because I know it will definitely come up. Then, finally, the market price bounces back from 50 back to 100, then boom, to 120. Now, once it hits 120, for as long as the person has not yet decided to sell, the person will be floating in profit. The person will be floating in a profit of $20. You get that? Because the price is 120. So the person has the capital back of $100, then now that's floating profit of $20. So provided he still maintains, he says, okay, I'm still going to wait. Maybe it will still be around there or may rise further. So for as long as the person retains that bag of rice when the price has already gone to 120, the person is just floating in profit, but he has not yet realized the profit. So that's what we call floating profit. Together. That is floating profit. Together. Yes. So two scenarios which you must understand here. We have floating profit when the price goes above the average price, and then floating loss when the price goes below the average price. You get that? Does it make any sense now? Now, in respect to this, normally it is calculated in percentage. How I want to make this very clear. How far the price is going to drop from the entry price is going to be calculated in percentage. For example, if this price dropped by 50%, that means what is 50% of $100?
$50.
It is $50. So you'll be seeing yourself, your asset, you will see your dollar, you will be seeing your dollar on that coin less by $50. Why? Because the price has dropped by 50%. You get that? You understand that? Yeah. So you will see the percentage you will calculate it will show you how much of a floating loss you are actually in. You get that? So that if you decide to sell, you will be losing that amount, which is equivalent to the percentage calculated. You get that? Now, when you float, when the price also, how far the price is going to rise from the entry price also will be calculated in percentage, right? Now, the percentage, if you calculate the percent, you get the amount of dollars that you'll be floating in profits. You get that? Okay, so I'm going to give this example. I'm going to use a live example. Let me use this. There was a coin I was trading. Right. Now let's talk about VET. VET is the coin I am trading. Now look at this. Let me tap on VET. Tap on VET, and I explain something. You see here on VET coin, we have, this is the current price. This is the current price of the coin. This was the average price that was established when the coin was bought. And now here, the return rate we are seeing, it is negative, meaning this price here, the current price of VET coin, is down by 1.15 from the average price. Does that make sense? We are saying average price is here. This is the benchmark. But now my current price is down by 1.17%. So meaning probably this is where my current price is. So the coin, the price of the coin has dropped below the average price by about 1.2%. You see the percentage changing. It has now dropped by 1.26%. So it is very far away from the average price by that percentage. Now imagine, how much of a floating loss am I in? I am in a floating loss of negative 1.24. If it is in terms of dollars, if I decide to sell when the price is below the average price by this percentage, how much of dollars am I going to lose? It is simple. You get one, yes, you get 1.19 over 100 times the capital, which is 1112. You'll see that that is the amount of dollars I'm going to lose if I decide to sell when the price is below by 1.17 from the average price. You get that? So that's why when you go back to the home page and you're seeing the coin, when you tap here, when you tap on the more, it will show you the equivalent in dollars. You'll have the percentage, how far it is below the average price, and then how much of a floating loss you are in. So if you decide to sell when the price has dropped by negative 1.06, you're going to lose $1.14. You see that?
Yes, I'm saying that.
Does that make sense for everyone? I hope it is making sense for everyone.
Now I understand. I was having sleepless nights when I was looking at my red return, which was I was thinking, hey, what's happening here? Now that makes sense. Oh, you know, now I know like how much what it means. Yes.
Yeah. So that's the bit you need to know.
Yeah, I really need to. You know that's why they said. You know, the moment you stop learning, you die. You need to keep on learning. Even Albert Einstein.
Absolutely. That is it. That is it. That is it. Learning is it. That's why I said earlier yesterday, I was emphasizing that when you join this business work perfectly well, but it will never work for that person who is not willing to learn.
Yes. So, and the way you're explaining, I'm really getting it. You know what? From yesterday and today, at least my heart is getting settled a bit. My mind. Yeah.
Yeah. So it is very important we learn. It is very important because this is personal business, by the way. It is personal business. The person who brought in the business just did a favor of sharing with you about the opportunity. And you shouldn't blame anyone if you fail to understand. If you don't take it upon yourself to understand, don't blame anyone. Like, for example, now I've shared a link in the group just to share idea, to share some knowledge. You see how many people are in the call? Only 8. Now, if someone fails to understand and tomorrow somebody say, hey, now how about this, and yet there's an opportunity of a free knowledge you're supposed to understand, and then you don't turn up, who is to blame?
You can start selling that knowledge also.
I'm not. It's free. Very free.
Yeah.
Very free. This is very free, you know.
Yeah, thank you.
So because my interest is I bring you in or you come, I share with you the knowledge because that's how I also learn. You know, so you come, understand some other things you may not learn all from me, but your inquisitiveness and your willingness to learn, the anger to learn and be the master of your game will make you learn, will drive you to learn it. It will give you the ability to sacrifice some few resources to learn more and understand better. So that at the end, it becomes a real good business.
But just going back to where we were there. If you go to running, I don't know if you can just go. There is,
Mm.
if you see on top, let's look at VAT.
Mm.
VAT has got VAT USD, then it's got 0.4 something, then it's got a percentage that's next to it.
Mm.
Yours is showing it on top on VAT there. Mine is showing a percentage. What does that percentage mean?
You're talking about this percentage, right? You're talking about this percentage.
No, the percentage is up. You know where it's written VAT stroke USD? And then there
Mm-hmm.
is figures that are changing there. Mine has got those figures
Yes.
and the percentage. What is that?
No, no. You see, the percentage. Sorry. The percentage there
Yes,
is
that
actually
percent.
showing you how the prices. That percentage is actually showing you how much of a gain. Like for example, you see this one. It is telling you
Yes,
that so far
that's a percentage I'm
VAT
talking about.
VAT has gained by since like in the last 24 hours, VAT
Okay.
has gained by over 28%
Oh,
in the
is it?
last 24 hours. Yes, that's what it means.
So
It is calculated in 24 hours.
if you had managed to buy it when it was
So if you
starting
had
on,
managed to if you had
would have
managed to
been
buy it like
28%
yesterday,
plus.
yes, if you had
Yeah,
managed to buy it like yesterday, okay,
yeah.
or probably some earlier today, you because this is currently it is indicating that it is by
Yes.
about 28, but VAT went up to around over 30%.
Okay.
Today it went up to around that percentage over 30 because we
So
traded
you
it severally, you know. You know.
understand. So sorry, it's like I'm taking you off topic a bit. But so you really need to understand these graphs here for you
You
to
see,
know
yes,
which is the slowest.
you, yeah, you see here, this is the current price of VAT, and it is
Yes.
telling us that it is already at 28% in gain, meaning the journey started somewhere here and
Yes.
it
Yes.
went. Currently, it is here, but remember, it went past here. It was up to around there. See
Ah.
that? But now it has just retraced. It has just dropped slightly to gain momentum to either continue and break further or even to 50%. So it's because there's something in the market structure, like price action, that there is always, anyway, I wouldn't wish to dive into that for now, but that
You
time will
can.
come. Yeah,
Yeah. Yeah. Okay.
I will be jumping like, eh? But we
That's
shall
very
understand
interesting.
that aspect of price action, price
Okay.
movement. Mm?
Uh,
Mm. But generally, that percentage just shows you how much of a gain in value VET has done in the last 24 hours. Okay.
okay. Because I was looking at that one, that one there will be green, but my return rate is in red. What's
Eh,
the connection there? Okay. All right. Thank you very much for.
yeah, and this changes in the prices just shows you how busy traders are in the market, buying and selling, buying and selling. Whenever it changes to green, it means some heavy buy has happened. If it changes to red, it means some heavy sell has happened. So it's just like that. Because
So
whenever
now
there is a sell, the
you need
price
to go in
drops.
the opposite
Whenever there is a
direction.
buy, the price rises.
So you need to be going in the opposite direction. When they sell, the price goes down, you buy, and then when the
Exactly.
price goes up, you sell. So
You sell.
it's like a seesaw sort of.
Buy, sell, buy, sell, buy, sell. Buy low, sell high. Buy low, sell high. So that is what drives you into understanding the market structure, price action, how the market structure looks like, how the patterns in which the market tends to follow to give us an amazing movement in profit, amazing profits, when we're looking out for buying opportunities and selling opportunities. So that is what drives you into understanding it deeper. Yeah. So that's why I say this one now is personally you say, you know what, I cannot understand this in detail. Yeah. Not like mm. Okay, so that bit is understood, right? The aspect of the floating loss and floating profit was perfectly understood. So whenever you see your coin is indicating red and it is showing this percentage, it is just trying to indicate to you how much the percentage has dropped from the average price that was established when the coin was bought. If you see it in green, it just tends to give you an insight on how much of a gain the coin has so far, you know, from its average price. So that's the picture. That's the picture. Okay, that's the picture. So floating loss, floating loss. So in sports market, you only experience floating loss, but no loss. It is you who decides to be at a loss by deciding to sell. But if you don't sell, why not? No loss, right? Good. All right. That aspect of floating loss is done. Now, let me come back to the homepage. In the sports market, we have three markets in which you can trade in. We have what we call the USDT market, we have the BTC market, and then the Ethereum market. Now, what does it take for you to trade in the USDT market? You only need USDT. So you use USDT to trade other coins. All right. What do you need to trade in the Bitcoin market? You only need Bitcoin. Now you'll use Bitcoin to trade other coins. The same applies to the Ethereum market. You cannot trade in the Ethereum market when you have USDT. You need to convert your USDT to Ethereum. Same applies to BTC. If you have USDT and you want to trade in the BTC market, convert your USDT to BTC. You get that? Now, however, these two markets, these are very volatile markets. This is a stable market. Now, why we call it a stable market is because USDT is what we call a stable coin. A stable coin. A stable coin, there are very many stable coins, but USDT is one of them. It is a cryptocurrency, but it is a stable coin. Now, stable coins are those cryptocurrencies or coins whose value is equivalent to or has been equated to the US dollar. It has been pegged to the US dollar. Meaning, in other words, they have a ratio of 1-to-1. Whenever US dollar is trading at 3,800 today, that will be the equivalent in terms of USDT. You get that? So 1 USDT is equivalent to 1 US dollar. So that is what stable coin is. Its value is pegged to the US dollar. So that's why it is called US dollar token. USDT. It is US dollar token, meaning its value has been pegged to the US dollar. Their ratio is 1-to-1. Is that understood?
Yes.
So whenever you're trading in the USDT market, you are actually accumulating USDT. You are accumulating US dollars. You get that? Whenever you buy and the robot sells, you get more USDT. Whenever you buy a coin and then the robot sells it for you, you get more USDT. So you are accumulating USDT. You are accumulating dollars. You understand?
Yes.
Absolutely. So if that is fine, in the BTC market now, these ones here are very volatile coins. Volatile coins are those coins whose prices are not stable. They fluctuate so much in seconds, minutes, they are ever changing in prices or in value. Okay. So the BTC market and the Ethereum, the BTC and Ethereum are very volatile coins. So for them, their value is not stable, but the USDT, the value is stable. But still, just like in the USDT market, when you're trading in the BTC market or the Ethereum market, you are actually trying to accumulate more BTC. Whenever you buy a coin with BTC and then the robot sells for you, you accumulate more BTC. You get that? Same applies to Ethereum. When you buy a coin using Ethereum and then you sell it, you accumulate more Ethereum. You get that? Now, the other thing, the recommendation is most people prefer the USDT market because it presents more trading pairs. It has more trading pairs, meaning there are very many coins you can trade in the USDT market compared to the BTC and Ethereum market. In fact, the BTC market only has about 6 coins which you can trade. So meaning if you want to trade in the BTC market, be prepared to only trade 6 coins. The Ethereum market has even more or less, about 5. You get that? But for the USDT market, it's like variety, very many, as we can see. If like we are already currently on the USDT market, so let's see the pairs. Let's see the coins. Any coin that is paired with USDT, that means that coin can be traded using USDT. You have to have USDT to buy that coin and trade it. So let's check. There are very many. You see, there are very many pairs. Very many. See them? very many pairs. You have a variety of choice to select from. I mean, you have a variety of coins to choose from. You get that? However, in the BTC market, let's check it out. In the BTC market, how many coins do we have? We have only about six or seven. We have 1, 2, 3, 4, 5, 6, only 6. You see that? So you just need to have your BTC to trade Cardano, BNB, Ethereum, Link, Litecoin, and then XRP. There are only 6. How about in the Ethereum market? How many pairs? There are only 5. Only 5 pairs. So meaning, if the market is not okay for these 5, that means you just have to relax and wait until there is an opportunity to buy. But in the USDT market, if one is not okay, go to the next. One is not okay, go to the next. And you can trade as many coins as possible. Okay? I hope that is okay. All right? So that is with regards to the USDT market. Now, the other thing you need to know about the USDT market is the USDT market, in fact, both the USDT, BTC, and Ethereum market, the number of coins going to be presented to you for trading will depend on the exchange to which you have connected your robot to. Now, I am seeing more pairs of coin because I connected my my robot to Binance. You see here, top right corner, top left corner, here. That icon, that logo is for Binance, right? Do you see it at the top left corner?
Top, yes, I can see it. Yeah.
Yes. If I tap on it, if I tap there, if I tap on this arrow, this drop-down arrow, it will present the other exchange. Like if I tap like this. So you'll see that mine is connected to Binance, not these other ones. So Binance has more coins. So if you have a Binance account and you connect your robot to a Binance account, you will be presented with more coins, whether be it USDT market, BTC, or Ethereum. But in the USDT market, you have more coins. But for someone who has connected his or her robot to Huobi or Indodax, probably if you come back here on the list of coins in the USDT market, you may find that it may not be as many as it is in here because mine is connected to Binance. So I was given more coins. But in other exchanges, you may have less coins or fewer coins. You get that? Few coins. You may have few coins. Like Huobi. Huobi has few coins. Okay, it is over 60, but at least it is few. Binance is over 75. How about Indodax? Indodax, let's check. Indodax only in the USDT market, you only have 3. So if you are trading in the Indodax exchange, you are disadvantaged.
Yeah, plus the percentage is very
what if how about Kraken? Kraken has less than 20. It is less than 20. You see that the difference now. How about when you tap on Bybit? Bybit has less than 30. Has roughly about 30 to 40. I've not taken time to count the number of coins, but there are few if you compare to Binance. See that? And when you change to OKX, there are even fewer coins. Oh, see, it's quite a number, but Binance is more. Together.
Yeah.
All right. So that is just to give you an insight on how you can be presented with. Let me go back to my Binance. So my Binance has more. You can scroll and scroll and scroll and scroll. Very many. See that? So that is Binance. So it will also present to you the list of coins based on the exchange of connected the robot to. Yeah. If you go to the sports market of Binance, you have more coins. If you go to the sports market of BTC in Binance, there are 6 coins. If you go to the sports market of Binance in the Ethereum market, there are 5 coins. So that is it. Okay? That is it. I hope the picture is clear. I hope it is. It is. What do you call it? Is it entering? I hope it is entering. You understand? Okay.
Yeah, it's like a sponge up.
Yeah. So that is the picture. That is the picture on the homepage. That is the real picture. Now, still on the homepage, on the coins, on the list of coins in the respective markets of either USDT, BTC, or Ethereum, we have this. We have the currency itself, the currency last price, and then we have the percentage change, right? Like in the 1 inch, 1 inch, 1 inch, 1 inch, 1 inch. This is the price. This is the latest price of 1 inch in the market. It keeps on changing. It keeps on changing for all. But at least it will show you the price, the last price, or the latest price. Okay? Then it will also show you the percentage change in 24 hours. Percentage change. So far, 1 inch in the last 24 hours, or in 24 hours, has only gained in value by only 2.46%. That is 1 inch. You understand? So if you scroll through, you will have varying percentages or percentage changes for different coins. You'll have very many. Now, another thing is, from the percentage change icon, you can decide to tap and arrange this coin based on the percentage. Okay? You can decide to tap on the percentage change, and these coins here will be rearranged based on how you have selected it in terms of ascending order. It's just a matter of tapping here and you'll see. Now, if it is arranged on a descending order, it will start with the coin that has gained the most in value in the last 24 hours. And then it will end with a coin that has gained least in value in the last 24 hours. If you tap again and then you want it to be in a order, it will begin with a coin that is here, the coin which has it. Then it will end down there by a coin which has gained most in value. So just tap here and you see the changes. So let's try it out. When I tap on the percentage change, let's see what happens.
Yeah.
Okay, let's see. I tap once. You see?
Yes.
It will arrange for you the coins that currently on the list of coins trading in Binance, which you can actually trade using royalq. VET is leading the way. VET is the coin which has gained the most in value currently, as per now. You see, it has gained by over 20. It has gained over 28% in value, followed by BEC, most large portion. Then Uniswap, get a coin which has gained the least, like AI. AI has the least. For it, I think it has just depreciated in value. It has gone down in value. It is the coin which has dipped so much in value. Together. Now, to somebody who doesn't know anything to do with trading, who may just don't want to depend on signal, who is just do you know which coin to pick?
AI.
The best coin to pick is
AI,
this.
Yes. Because it's going to go up only.
Because it is a coin whose value has come so down, and because it has come down, it is on the verge or at the point of now beginning to have a reversal to begin rising up. So for it is somewhere here. All this drop in value, it has dropped so much. Huh?
Yes.
So you pick a coin like this, you will be in things. As long as you're patient, you will be in things. Just imagine. Sorry?
Kana nä å ndå wekerea ciarä thä.
I think you need to mute all the people who are coming in because they're coming in.
Na mchezo kufereka tu.
Chokoma.
Yeah.
Unatupigia kilele wewe. Unatupigia kilele.
Sorry.
You mute yourself, yeah? Okay, thank you. Okay, so the best coin for any amateur. I've given you the secret. Hey, I've given you the secret. Pick a coin which has gained the least in value. In fact, the last or the least performing coin, that is the coin you pick. Do you know the secret? What will happen? Just imagine. Imagine that the coin had moved from here until by negative 5%, like it is here. This direction and begins to rise. Imagine you entered here. For the market price to just come back to 0%, you already have 5% in profit. Yeah? Suppose now it begins going to the positive. It now goes into the plus, like here. You see? This is now the plus. The plus zone is here. You know, this is now in the plus zone. And going forward, all the coins are now in plus. But imagine you entered somewhere down there in a coin that was in -5. Just that movement from -5 to come back to 0, it is already 5% profit. What if it goes like VET 28? You add 28 plus your 5%, which you started, because it's like for you started the journey earlier. You started it early. So you're entitled to gain more. You're entitled to more profit, you know? So 28 plus your 5 for having an early kickoff. You find you're having for you percentage. If you are still in the trade, for you, yours will be, as others are reading 28, yours will be reading 33% in profit, floating in profit. Because of that 5, that is it. That is it. I may not go so much far. For today, let's also end here. We shall again do tomorrow, where we shall now look at individual coins and the trade settings. But at least the picture is clear. Let me entertain. Let me get your question, 1 or 2. Then we end it for now. Okay, you're free to unmute now.
Okay. Coach, there's one question I wanted to find out.
Yes, please.
That percentage, it's a percentage on a 24-hour basis.
Yes.
Is it a 24-hour block basis, or it's got a starting time, like let's say 12 o'clock or 6 o'clock or something, or is it just the previous 24 hours?
Okay. The timing, listen, the timing for all coins to read 24 hours starts from 3 p.m. at night. Okay, to me, it is 3 p.m. It is 3 p.m. my time. I don't know what your time would be.
All
but
right,
that is the time when it...
Let's just use GMT.
I don't know GMT. I don't know.
All right.
But
now,
is it 3 p.m. or 3 a.m.?
3 a.m. in the morning.
3 a.m. in the morning. So GMT should be midnight.
That is the starting. That is the starting time.
So
it begins reading now. If like for example, the 24 hours of these coins is going to end at 2:59 p.m.
AM.
Is it PM or AM? AM, yes.
AM is
at night.
AM is at night, yes.
So now,
then it begins reading afresh at 3.
Now,
so since 3 p.m., VET has actually gained in value by over 28% since 3 p.m. in the morning today.
Okay, so what it now means is, for me to get the most value is for me to check the coins when the 24-hour starts on 0 or just before it ends. Then I can get the lowest to pick so that I can trade with it the whole day. Am I right or wrong? It's just my thinking. Like let's say at 20 to 3, I start looking through the coins to see which one has got the best, which one has lost the most value for me to work with
my
it.
friend, I cannot tell exactly which one, because in the course of the day, different coins
Yes, I understand.
Different coin gains differently. They gain
Okay.
really differently. Their volatility, like the momentum picks up anytime, you know,
Yes.
in the course of the day, you know.
Uh,
So most of these coins have different movements together. So you can really not say that this is the best time. It is not like Forex, where you have a specific time when the market is very active. Yes, there is in crypto as well, but it's not what we so much rely on.
But what could be the driving factor in crypto market? Like other markets can be fuel prices, can be food prices, can be natural disasters and all that. All those things, they can mess up the market. Does it also apply to the crypto market?
There are very many factors that surrounds the crypto market, and that influences the movement in price crypto market. There are very many, but majorly what tends to move the market is the behavior of Bitcoin. When people, you know, when something happens to Bitcoin, that's what the altcoins also will counteract or react. If there is a pump in Bitcoin, the rest of the altcoin will behave the same. If there is a dump in Bitcoin, the rest of the coins will behave the same. You get that? So the mother coin, which is Bitcoin, is what most of the time tends to determine the movement. And of course, the movement of Bitcoin is influenced by certain people, the whales. You know, people look into Bitcoin as the most, as an asset actually.
Yes.
The only asset. So people, sentiments, news, a lot of features. I mean, a lot of factors can affect Bitcoin. So once it affects Bitcoin, if it affects it positively, that means all the altcoins will also behave likewise. If it affects it negatively, the rest of the coins behave the same. You know what? But everything, the genesis is Bitcoin. The way people behave, look at Bitcoin.
Yes.
The news. Okay, so I have one question.
Yes, please.
Coach, sometimes you see someone may post a coin and it shows that it is having a high profit rate, and someone also is trading the same coin but is also having profit, but it is less. So is it because of the entry point, or is it determined by the take profit someone set on a certain point?
You put on that question again, please.
We might be trading the same coin, but the coin you have, you have your profit ratio. The return is very high. It is like 22 plus, and the coin is not yet selling, or it has not yet sold. And another person is having like +3. Is it determined by the take profit someone has set on a certain coin, or it is determined by the time of entry in the coin?
Now, both factor contributes. Both factor, your entry, and then the percentage, take profit. Now, for example, I'm going to give a simple example. If I drop a signal and the signal, I drop it like now, right? On my time, it is 8:40. Now, whoever, and I said to take profit of 2%, right? Whoever enters exactly when I dropped it, right, is most likely going to gain, or is going to exit the market faster if the market price rises by 2%, as it is in the signal. All right. Now, somebody may say, why should I put only 2%? Let me see. Maybe let me put mine 3% or 4%. So what happens is, as the rest of the people are exiting the market, that person who put a bigger percentage in take profit will still remain in the market. Now, in case if it so happens that the value of the coin continues to gain, you'll see as the others are off, for you are still enjoying the floating profit is just increasing. You get that? So it depends on the take profit and the time of entry. You understand?
Okay.
Yeah.
Coach, yesterday you said you would show us how to manage wallets. Will it be possible today?
It may not be possible today. Just keep attending.
Okay, all right.
Yes. And any other?
Hello, Coach. Hello.
Yes, I can get you clearly. Please go ahead and ask your question.
Okay, so Coach, thank you for that. I'm asking, is it better to trade using royalq or to buy coin and hold in Binance? So which one do you think is more advisable in this period? In this the bull run we are about to enter, is it to trade on royalq or to buy and hold? Which one that is more profitable?
For me, what I recommend is this. You see, some people tend to lose track of whatever they're doing. In fact, they don't know what they're doing. Some people just do what we call bandwagon. They just jump in because others are doing so. The truth is, I'm telling you the truth. The truth is, whoever is trading, of course, trading comes with understanding. That's why you say there's more sacrifice into trading than you holding. Because you holding is just a matter, you buy and leave it there. You forget about it. Go and do other stuff. How long it will take to gain by significantly, that's none of your business. You don't want to know. You just want to come and check on it later and see how much they are gained. But the truth is, whoever is trading makes more money compared to someone who is holding. More money. Because imagine you have a scenario where the market price is moving in this manner. Let me just give you something like this. I really have to do this. Let me share with this. I hope you're seeing my screen.
Yes.
Imagine you have something like this. You see the market price will move, right? In price action, there's what we call price delivery algorithm. Price delivery algorithm. These are cycles or patterns in which these are patterns that triggers the market price to move in certain pattern, okay? Or in certain direction, in other words. So what happens is, there's what we call a consolidation. I needed to talk about this later, but let me just hint on it. There's what we call consolidation. Consolidation is the phase where people tend to accumulate position. People are buying and filling up position. Then once consolidation is sufficient enough to move the market price to the upside, what is going to happen is that we're going to have an expansion. There will be a break off this consolidation point, and then we have an expansion. All right? A movement away from the consolidation area, what we would call the ranging market. Now, whenever the market expands, it doesn't expand forever. It comes at the point where the momentum keeps on reducing, and then it will come through a resistance area, right? It was going to encounter resistance. Now, whenever it encounters the resistance, for the market price to continue rising, if it was supposed to rise, it has to gain momentum. It has to gather more momentum. That is where now there's a moment of a retracement. You get? The market price will retrace. It will drop slightly, all right, by either 30% or 50% or even 60% or more, but normally within those three range. Now, if it is to continue rising, then you shall see if this was the resistance point, if this was the price level that offered resistance, that prevented the price to continue rising or expanding. The next movement here, after gathering momentum midway, is now to come and break this point, this resistance. Boom, up to that point, then it will experience the same thing. Then again, so it will be like a cycle. Now, this cycle here, if you know what to do as a trader, you enter from points like this, you buy, you sell. When the market retraces, you buy, you sell. It retraces, you buy. Now, imagine you're collecting more profit. You collected here, but somebody who was holding, imagine you're just here, you wait. Whenever it comes to this point, instead of taking opportunity, getting some liquidity, some money, but you are just there seated waiting. It will drop, giving you another opportunity to even buy. It goes further to this point, you are just looking on. You're not taking profit. In business, take off profit. take profit. Even for those who hold, by the way, for those who hold, just that people don't know, there's a module in which you take profit. You take profit intermittently. Not that you just sit and wait. No, it is not like that. There's a module, there's a way you take off profit also. You have to design a percentage, you know? You get that? So for me, somebody trading makes more profit. It is the best time to do now is to trade. Gone are the days for you now to begin. It is to trade. Trade. The market is off the bearish season. It is already in the pre-bull run. And in a pre-bull run, you cannot say you're going to hold. That means you don't know what you're doing. Unless you don't have time. Then you can go for holding. You get that? Even if you don't have time, you can go for cycle rather, other than just holding, you know? So, the madam who asked that question, I would recommend you trade. You trade. For as long as you're willing to learn and you're willing to spend some time doing a few settings here and there, you trade.
So the cycle, if someone go for cycle now, won't the coin dump on someone? If someone use cycle instead of, because it might go up and still dump on someone. I don't know. Is it because of pre-bull or it will definitely rise up faster? Because the cycle can be dangerous on dumping on someone. I don't know. Or sometimes cycle will keep on buying from the top, and if you don't have enough money to buy margin calls, it may end up keep you hanging for some time.
You see, you know what kills us? What destroys us? Most of the time. What destroys us mostly, I don't know who was asking that question. Who is asking the question? Unfortunately, I don't even know. I don't know who is on, who is who, and who is on. But I'm assuming you're in the team. You're just there. I just don't know your name. But this is what I have to say. Most of the times, people fear dumping. I don't know why. People really fear when the market dumps. I don't know why. And it is not wrong to buy at the top. You get that? It's not wrong. Just that sometimes it doesn't favor whoever has little capital. But it is not wrong at all. If you know proper wallet management, you enjoy. Because the robot has been designed to make for you profit in either direction of the market, whether up or down. You get that? And you can profit all the way, my friends. But sometimes it doesn't favor someone who has little capital, because you may not be in position to replenish, to enjoy the sub-sales. That is why sometimes it becomes hard for some other people to take it up, and they feel bad when they go into floating loss. But the truth is, must always, it is good. You can buy at whatever level. Yeah. I hope I answered that question.
Yes, thank you so much.
Coach, there's one more thing I just want to find out. When with these courses and lessons, will you be able to make our own signals as time goes on?
Sorry again? Sorry, pardon?
I was saying with time and the lessons you're teaching us, will we be able to make our own signals?
Will I be able to?
Will you be able to make our own trading signals as time goes on?
Yeah, why not? Of course, in this training, I do give basics. When it comes to the signal, I give basics as well. But still, the basic, if you use it well, you can you still generate signal. I know that's a tricky question. That should be Kingston. But I thought I shared with you yesterday. But
because I need to know.
with the time, yes. With the time,
Right.
yeah. You'll be in position to you can make your own. You can really generate your own signal. The most important thing is for you to know when to end.
Yes, like to know the basics, because from the basics you can get to the top.
Yes.
Yeah. Any other questions, probably?
Yes, sir.
Go ahead.
Thank you, Coach. Yeah, I'm asking about floating loss. At what time or at what exactly when I'm in floating loss, where I can put it? Are you hearing me? I'm saying
Yeah.
mute.
Sorry? I'm getting you. Just ask the question, please. I'm getting you. I'll answer.
Me, I'm asking about the floating loss. But if I'm floating loss, where exactly I'm supposed to pump in the reserve capital so that I can get out of the floating loss?
Okay. Now, the best time to pump in. Okay. Let me say this before I whatever. You see, as I shared with some of you yesterday, that when you're trading, take interest to understand the movement of the coin you're trading.
Yes.
Take interest to learn to understand or to observe or monitor the movement of the coin you are trading. It is not until then you will know when to replenish. That is replenishing like a professional, not like a blind man or blind woman. That is like a professional. And what are the best points to replenish is when the market price has come to. There are very many things you can use, by the way. There are many, but one of it is you can monitor the markets, the market structure of the coin you're trading. Now, if you monitor, there are two ways in which you can replenish. One, you can replenish if the price was going like this, it was on a downtrend, right? You can replenish if you see, now you're taking me to technical analysis. But the best time to replenish is when you see a breakout, a point of reversal where you see that the price has reversed and it is now beginning to go on an uptrend. That is the time you enter, you put in that reserve capital so that you can now enjoy more profit with your more capital because the market price will now be, smiling, gaining upwards, You get that? So the best time is always at the end of a downtrend, at the end of the price, at the support level, at the point where there is a reversal, when the price has now finally reversed, it is no longer going to continue in a downtrend, but rather it is going to shift its movement towards the uptrend. That is the best time to pump in money, because the pumping of money is going to do two things. First of all, it will allow you buy more coins. Secondly, it is going to reduce your floating loss. I demonstrated it yesterday. That, for example, if you had $100, right, and let's say a coin was floating at -10, and you had a reserve of another $100. If you felt that this was the best time to replenish, if you pump in this $100, the $100 is going to cause an effect of reducing this floating loss by a half, which will bring it to -5 only. If you had $200, it is going to reduce it to about -2.5. If you have double of this, what will the double do? What will the double do? Divide the 10 by 4. Divide the 10 by 4. That will be roughly about 2.something%. So the best time to replenish is that point of reversal, because you're not going to care about the percentage. Your interest is to reduce the percentage, but at the same time, buy more coins. Take advantage when the price is at that lowest. Buy more coins. And then, thirdly, enjoy the ride as the market price now begins gaining. You will begin enjoying floating profit all the way down there, even before the price coming back to the entry point. for you, you'll be enjoying the floating profit.
Thank you, sir. I've got you. There, when you are using over which time frame? Long time frame or short?
But you don't have to worry. When you go to the chart, you'll understand better. But that is just briefly what I had to say. When we arrive at that point, you'll understand which time frame.
That point needs a lot of elaboration.
Okay. If there's no any question, I will allow you to.
One other thing is, like, when you want to replenish to counter your floating loss, do you just use the same settings? You just add the manage just like that, or you need to reconfigure the settings again?
Replenishment is done in two ways, either manually or automatically.
Okay.
With the automatic replenishment, there's some small adjustment you make on the setting. For manual, you don't need an adjustment. Just go and buy, pump in the amount of you want to pump into the coin, and you're good to go.
And in your opinion, which one is better, manual or automatic?
Let's get there, then you decide.
All right, okay. Let me not swallow before I chew. Let me chew first.
Yeah.
Okay.
All right, then. Let's catch up tomorrow. Same time.
All right. Thank you very much. If you could, if possible, if you could send us the video, maybe the earlier the better, so that we can go through it before, like maybe even tonight.
Thank you.
So, it's okay. I'll share the recording. But did you follow the other one? Because there's one I shared in the group. Did you even follow?
Yes, I saw it.
I followed it.
When it came in, I was on it. You actually saved
Okay,
it too.
then I'll drop this as well.
Okay, thank you very much.
Thank you, Coach.
Good night.
Thank you, Coach, very much.
Thank you, Coach. Good night.
Have a good night.
Habari. Huku Meke. Ulisema utakuja lini?